Hello and welcome to the Investing Success Show. I'm your host, Brian Patton, and today's show is about securing your investment for the next generation. We've spoken with several people about their advice for raising children and what they want to teach them about investments. So enjoy the show. Today we have Dan Merkel with us here to, this is a part of our series where we discuss as a parent, what you want your kids to know about money, investing, and just life in general. So I've asked Dan to join us and tell us. Dan, I know you've got one just graduating from college.
Mm-hmm.
Dan is Alpharetta City Council member, insurance guy, former Alpharetta Chamber president, and has been very successful in all his endeavors. So Dan, tell us if your kids were sitting right here in front of you, what do you want them to know about living a successful life?
Well, I'm going to tell a quick story. It goes back to my wedding day. And my grandfather was in town from Iowa with my grandmother. Grew up in the cattle business, and he was the old school. You buy one cow and feed it until it's big enough and sell it, and then you got enough money to buy two. And he was very, very successful at that. He approached me at the reception and said, "I heard you and Colleen bought a house." And we were just out of college. And I said, "Yes, sir, we did." And he says, "How much was that house?" And I said, "It was $100,000. He looked at me square in the face and says, "Where the hell's a kid your age get $100,000? And I reluctantly or whatever just kind of looked at him and said, "Well, we put $10,000 down and borrowed the rest." And he said, "Make sure that's your last loan." And he was dead serious. So back in the day, that's what they did. They lived in the apartment above the butcher shop until they saved enough money for a little piece of land. And then they waited and saved enough money to build a house. So mortgage companies have made borrowing money, banking industries have made borrowing money way too easy.
I think that's why we have 30-year loans, because
yes, and 72-month car payments I heard is available too. That's crazy. So I share that scenario with my kids that technology today, social media in general, will tell you on a regular basis that you can afford a lot more than you can really afford. So I don't think you need to wait until you can save up $300,000 to get a house, I think, but you need to certainly have a significant down payment. We talk about car payments. Both my kids, even though I purchased used cars and let them drive it, I charged them each $100 to $150 a month, which put towards their tuition. So when they went off to college, but that was that experience that people treat things based on their investment in that.
Mm-hmm.
So I had a client that had almost 400 rental properties after the economic crash back in 2008. And he said, "You knew which houses were bought with zero money down." Because when times got tough, they just stopped making the payment, stopped taking care of it. They were a mess. So invest in what you want in life. Only buy what you can afford to buy, and take care of what you do have. Would be the consistent conversations in my house between a 19 and a 22-year-old.
That's good advice, Dan. Appreciate you joining us to share some of your heart about being a father and good parenting advice. And Patton, we're here today with Benita Dodd, and we're doing a segment, a series of podcasts here, talking about, as a parent, what you want your kids to know about money and investing and basically being a success in life. So I've asked Benita with the Georgia Public Policy Foundation, and I believe, Benita, you have some children and grandchildren. Tell us what you think about the topic, what you would like to, if your kids were sitting here today, what you would share with them regarding that.
Well, the first thing I have told both my sons is not to expect anything from me. I am living my life to the fullest. I'm enjoying every last penny, and they're out there on their own. I grew up in South Africa under apartheid, and my family didn't have a vote, and we struggled to find property in South Africa that we could afford. In fact, I was in college when my parents were able to buy their first home. I understand how important the private property right is when you have personal ownership, and when you're invested in that, and you have pride in something and it's yours. And I have impressed upon my kids that is the way they need to look at home ownership. I've also encouraged them not to spend much. I drive a 12-year-old car myself, and it goes just fine, by the way. And they both have successful careers. One of the things that I had hoped for both of them was that they would go through college. And it was a hard lesson for me to realize that I couldn't live my kids' lives for them. I brought them from South Africa. I brought them out of a very untenable situation, and I gave them opportunity. And they made of that, excuse me, they made of that opportunity what they wanted to. And they're both happy. They're both successful in their own fields. Neither of them has graduated from college yet. One was a successful Marine, and I'm very proud of him. And the other is working his way through college because after the first 2 years, I said, this is not what I want to see in your grades. You're on your own. And so they've kind of learned from the school of hard knocks, both of them. And I'm very proud of what they do and how they are improving their lives, and both own homes and both have families, and neither is in debt other than that, as far as the home ownership thing. And I'm very proud of them because for many people, they want to see their kids become wealthy. For somebody who came from nothing, you want to see your kids happy and seizing opportunities. So I'm really proud of them.
That's great. That's great advice for your kids. And I mean, as a parent, I take, wow, that's some tough love that you provided for them. So not everybody has the love for their children to provide tough love like that.
So. I grew up under tough circumstances, and I didn't want them to think that I was going to accommodate their wants. So they've learned that I would help them with their needs, but they were on their own for their wants.
Well, thanks for sharing that with us. We are back with Travis Howe of Transworld, and we spent the previous show talking about business brokerage and Travis's experiences in the business world. And I think it was very helpful. In this show, we want to talk about some personal stuff.
Yeah, a little bit more personal, not too personal though. And as Travis, in this show, one of the things that Brian and I decided that was important for us in 2019 would be to pass on wisdom and knowledge to our kids. And so we'll ask you if you can think about your life and your life experience so far. What is one thing that you would,
or a couple of things
that you would definitely do again, or what kind of advice would you give your kids?
Well, it's a good question, because like they've already mentioned, I'm at least in my 90s now. No, not really. Mid 60s. So we go back, and I had a dad that didn't really know how to really direct us and guide us. Didn't really know what kind of even education or vocation of what to do. So I never had really any advice on that end. So I came into graduating college and then moving into the business world, really didn't even know what the stock market was all about, So early on, I missed all the things of as far as what the company was offering, as far as, invest in retirement plans, stock purchase plans, those kind of things, because I didn't know a lot about it. So I lost a lot of years of investing that just in normal growth modes, whether you want to look at it from anywhere from 4 to 6, 7, 8%, would have been really huge in adding on to my current portfolio. So I would say that was the big thing for me, and that's one thing I've changed a lot with my kids as they were growing up. And one thing I told them early on, I said, don't even think about not going to college. That's not an option, when they were even in maybe grammar school or high school. So fortunately, none of them ever even considered not going. And, we worked with our kids a lot about trying to determine where do you think, and really for us, this was also, where does God got you going? We're a strong Christian family. And we said, where do you think you're being directed? I had some of my own thoughts. My daughter, I thought basically med school for her. My younger daughter was really, I thought was really going to be in education. And my youngest son didn't really know, but I knew he'd be somewhere in the marketing world. And as it turned out, my oldest daughter said, well, Dad, I'm wearing a white coat. That was my dream that she was in a white coat. She said she's a PA for an ear, nose, and throat surgeon. So, and she picked a great career. And my middle daughter taught school for 3 or 4 years. She's kind of retired now with 2 kids. and my young son's in a marketing role doing extremely well. But, some of the things financially I've told them that I've learned along the way is, and I believe if you would invest with discipline, meaning that you don't have to go out and buy the latest, greatest stock, and those kind of things. I remember telling one of my financial guys, I said, when Apple got down to $99, and this is quite a few years back, I said, "Why don't you sell everything I got, buy everything at $99?" Now he didn't do that, and of course Apple goes to $600. So, but that's always we can all look at that.
Should have sued him.
I said, "Man, you're fired, bro." But I'm thinking, whatever your companies are offering, or even if you're doing it, if you're an entrepreneur, is get into, and the main thing is going to be is discipline, because when you're young, you're not going to be wanting to take a lot of your spendable cash and, put it in long-term investments for retirement down the road and those kind of things. But I tell you, it's important to do. Now, one thing I would, because particularly with the volatility in our government, I think the marginal tax base is at 39% now, pretty low. But you don't know what it's going to be like 10 years from now and that type of thing. So I would, I've been really talking to my kids about only putting into a 401k of what the company matches. Don't put any more in than what the company matches, because you're going to have a tax event down the road here. And by the time you turn 59 and a half, it could be 70%. So whatever they're telling you now that you need to have, or what you think you need to have when you retire, might be totally different if you got a 70% tax structure out there. Right. Versus setting up something like a Roth. I would recommend I've told my kids I want them all set up Roths and do that with post-tax dollars. Then you're only paying capital gains tax, which is substantially a lower tax.
We hope, unless they change that.
Right. Well, that's true. And you have to pay attention to what's going on, because, they could change anything right now and take all your IRA 401k money. I mean, you just, it's a pretty dangerous area out there. So, but selling it with doing things with I know it looks better when they're taking pre-tax dollars and putting in your 401k, it seems to ramp up better, but you're going to pay the piper later on, because when you turn 62, 65 and you want to start taking that money out, it's going to be a different ballgame, and when you start having to pay the federal income tax with no deductions, because you might not be working and you might not have, house may be paid off, it's going to be a tougher environment.
So you're saying I should start my three-year-olds off with having them invest in the market?
Well, I don't know about that, but
give them plenty of.
Can a 3-year-old do a Roth, or you have to be 18?
I think you got to be a little bit older.
Okay.
I mean, I would only look at that, when your kids are coming, even coming out of college, but and even before that, certainly as parents, we want to be doing those 529 plans, because just getting your kids through college is going to be difficult itself.
That's right.
Praise God, I've gotten all my kids through college.
What's one lesson you learned that you would not do again, or you would advise your kids not to do? Maybe you've done everything perfect, but what's one thing you wouldn't do again?
Well, I think what I just talked about is put all those eggs in the 401k basket. And then
what about credit cards?
Well, credit cards absolutely, is be credit card debt free, and I don't think many of us are too disciplined to, I'm kind of on Dave Ramsey's camp here as far as don't using credit cards, but on the other hand, you can't build any kind of credibility without some credit history. That's right. I mean, I was just sitting with a friend of mine at the bank the other day here about a business loan, and without using those credit cards, there's nothing for them to track. So, but you be disciplined in what you do as far as paying those off, because don't use credit cards to pay off other debts there, because the interest rates on those are way, way overboard. So you want to be very good about how you use your money, be liquid in certain areas on that basis, and just be really, don't spend ahead of where you are right now. But I think, it's just to be disciplined. It's according to what company you're working for and what they're offering. And then, get into that mode and get into investing in those early on and sticking with it. Now, you might do them in some other, and certainly getting into some other mutual funds. I'm looking for financial planners for my kids that have a good track record and get a broad coverage of where they invest their money, from mutual funds to stocks and all the different types.
So, Travis, let me ask you another question. What do you envision your retirement looking like?
It's a good question, because I'm already there. So pretty much so.
So you're kind of retired,
apparently
mentally
doing podcasts.
Doing podcasts.
Well,
on our show.
That's why I kind of chose, being like we talked about earlier, a business broker, I can work this when and where I want to.
That's right.
There's no real, I don't have a storefront, I don't have any inventory, and I can do this when I want to once I build all that up. And I've got some other things. I really like, I like companies. I like working with companies. I liked the overall aspect of helping them, and particularly if they've got a really good idea of what they're doing out there. And, because I do miss a portion of that when you're running a larger company. And because, see, in my day, I was the only guy here in the Americas. We had a guy running Europe and a guy running Australasia. So I had nobody breathing down my throat all the time.
That sounds so cool when you say the Americas.
Yeah.
Well,
the
North
Americas.
and South America.
We're talking about,
That's what we called it. So
Brian's not from
regional director of the
Americas.
Americas.
He's from Georgia.
I'm from Mississippi.
Mississippi. That's right.
Mississippi.
Obviously,
You said it right too.
Right. But those right now we're in we're and this gets into really what your whole game plan is, but moving a lot of things out of my 401k now and moving them into things like universal life type policies and index IULs that have, once you put them in there is no tax to those at all.
Sure, it's got a Roth type structure to it.
Correct. And so, it's, so now while I've got some still tax deductions, why don't I go ahead and take the hit now rather than wait until I'm not working at all and moving those into something that's going to pay me back in tax-free dollars, and I don't have to worry about that. So, and the Social Security is, some of us who paid the max in our entire business career, it's not a bad payout, but it ain't going to get you where you want to be.
It's not going to be the investment that you were looking for.
And that's the problem. Most people are thinking they're going to retire, and the Social Security is going to pick up where their income left off, and it's not going to be even close.
Well, that's good. And so, to recap a couple of things, you basically told your kids that they need to go to college.
Yep.
And you told them that to find out something you feel driven to or passionate into and to focus on and just be disciplined in your investing strategy, not looking for the big hit, but it's a gradual over time and, building that discipline and creating that discipline.
Yeah. I don't want to discount the trade schools and tech schools too, because I've known my daughter's, a couple of her friends who was, learned the plumbing trade even in high school and went to a tech school, and he's got a thriving plumbing business. So
any kind of formal education, not just straight off informal, and there's apprenticeships, but some type of formal education is going to make
degrees.
That's right, like an art or a political science. That's very close to the science. They're all related.
Right.
So
I could see it in my own companies. I could see the difference between someone who had actually had a college degree versus not. Now, I'm not saying that they weren't really, really good employees, but you could see some responsibility factors, some other things that kids who'd gone off to school.
Some disciplines that were
just
learned.
had learned a little bit more, so because there's certain kids who certainly aren't built for college, and they're going to do well. I don't know if does Trump even have a college degree? I'm not even sure he does.
He went to
did he?
Wharton School of Business.
Did he really?
He did.
I didn't know that.
Travis, this has been very helpful. It's helpful for us, helpful for our listeners, and so we appreciate you coming on the show and giving us that good advice and some life advice and some business advice, and hopefully while it'll help, you'll be able to pass that on. Sounds like you've already passed that on to your kids, and that'll help a lot of other people. So we appreciate the time, and so
you're welcome. Just got to make sure those kids listen.
That's right. We'll make sure they're listening.
They are so far. They're doing pretty good. So.
Thank you very much.
Thanks for joining us. This has been your host, Brian Patton, along with co-host Adam Whitmire. And I hope you enjoyed the show where we've learned about securing investment for the next generation. And we've been talking with folks about what they want to teach their children about investments and how to be successful. Don't forget to rate and subscribe to the show. And if you want to check out our website, it's brianpattoncommercial.com and also bpcbusiness.com. Thanks, and we'll see you next time.